Equity markets have been performing well, but they haven't experienced a recovery in line with global markets from that global financial crisis. Now, Njonji King, who is CIO for Cavio Fund Solutions, is joining us now for a look at Africa's investment potential. Morning, Njonji. Looking at Pravin Gordhan there, we always feel better when we listen to Pravin Gordhan. He seems so measured, he's got good vision, he's sober, and he puts a good story for the African growth potential. But the sense is that for a long time it's been talk. The recent World Economic Forum in Africa we sense that maybe the talk is going to turn into walk and there's going to be some more action. So how would you describe broadly the state of play with investment in Africa now?
I mean, it's an interesting question because I think for a long time people have looked at Africa and wondered whether the continent was going to fulfill the potential that people have talked about for many years. What we've seen recently is that the GDP growth numbers have been there, and not only have they been there historically for the last 10 years, but they are forecast to continue growing at the same rate. And I think that is what's focusing people's investment minds towards the continent and the opportunities. When we at Cavio talk about Africa, we talk outside South Africa. The opportunities are definitely, there are opportunities in South Africa, but outside South Africa, the GDP growth rates are phenomenal, and it puts them amongst the top 10 in the world. And that is what focusing not only African investors, not European, but globally people are looking towards the continent and looking at investment options there.
How aggressively are they looking towards the equity markets though? Because you've got investors obviously identifying all of this opportunity and looking to leverage off it, but then you've got to question things like mere liquidity on African markets and the challenge that poses for equity investors specifically.
And it is a challenge. I mean, there's no doubt about it. Outside of South Africa, liquidity is limited, particularly when you look at global investors. When they look at the African equity markets, they're very small by comparison of any other equity market that they're looking at. What you need to assess as an investor is whether you're being paid for that illiquidity. Your investment options are varied. Equity markets are one of them. It's probably the only liquid option that you have in Africa at the moment, but the liquidity is limited and you need to be paid for that premium. So you need to evaluate what the costs are, you need to evaluate what you're trying to achieve, and you really need to understand those equity markets that you're investing in. They're very complicated, they're very different. This isn't one exchange, this is not one country. You can't just buy an index like you would in the European context. You are buying a region of many different countries, many different exchanges, many different regulatory regimes. You really need to understand what you're buying and understand that liquidity risk that you're taking.
Let's look at some of the obstacles to investment, and one of them might be that a lack of liquidity on the listed entities and the regulation of the different stock exchanges, varieties there too. For example, in some African countries, they're not obliged to give trading updates. So when results come out, there's often a big surprise. So the shares move wildly. But beyond that, there are practical issues, and maybe one has to break it down into countries, not Africa, the continent. And one of the things that has been mentioned in the literature is corruption. Now, people say that we're dealing with it, but to what extent is corruption still an obstacle to that confidence?
I think from a perception issue, corruption is still a problem. I mean, where it is a problem, there is very varied across the continent, different countries. This is again, we often say at Cavio, it's understanding the different jurisdictions that you're actually investing in. You can't just you can't take a broad brush and say, I'm going to invest in Africa. That's, not an option on the continent. Corruption is a problem, but like everything in Africa, it's improving. It's improving to different degrees in different countries, but it is improving. And I think when we're talking about Africa, a lot of what we talk about in terms of corruption, infrastructure, a lot of the regulations, a lot of the entities such as the exchanges, everything is improving in the continent. It's not where we want it to be, but it's improving to where we want it to be. And I think that's when investors are looking towards the continent, they want to participate in that improvement.
Yeah,
because
that from an investor perspective, what about the companies themselves? I mean, are there more companies looking to mechanisms like the equity space to raise capital and fund their growth that way?
It's improving. It is there's not a very big listing culture across the continent. A lot of these are much smaller companies, entrepreneurial characters involved in the companies. You also have a lot of family businesses, and from a family perspective, listing creates another obstacle in terms of reporting and disclosures, which is not necessarily where people want to be. But exchanges are working very hard themselves to improve the number of companies that you see, and particularly on the government entities. We saw recently there was a listing of the electricity provider in Uganda, for instance. It's those electrical, it's those utilities, it's the governments are pushing these listings, and they are trying to improve the number of companies.
If I'm a company, a South African company, and I want to get into Africa, What is the advice that you would give? Are there places that you would go first? Places that are more sympathetic to investment and infrastructure and building things?
It's an interesting question. I think it again depends. I think when you're as a company, you need to be aware of what you're trying to achieve. Again, it's not one continent, so east, west, very different characteristics, very different markets. As an investor, and that's our expertise, we're really looking to capture the growth rates. We're trying to capture it in a risk-controlled way, and I think the only way that you can do that is by being on the ground and really understanding these countries.
What about mechanisms like the Africa Board that has been generated by the JSE? I mean, how do you see that acting as a mechanism to actually galvanize things on the continent even further?
I think they're all improvements. I think what we need to do is we need to increase awareness. The JSE is a well-respected entity. It's well known globally. And I think by having these kind of infrastructures and these kind of entities, it just creates awareness and helps people feel comfortable about investing. I think big obstacle to investment in Africa, a lot of talk, but at the moment, limited investment is really about understanding and feeling comfortable about what they're investing in.